Clearly, the business secretary today coming out and being very robust and saying that these are just normal market actions and there aren't problems with the pension funds, etc., etc. I find his confidence reassuring, I guess. But again, this government has had a few U-turns previously, so I don't know what their track record is like on this front as well. What do you think?
Yes, good morning. I think the first thing to think of that comes to mind for me is what's happening with confidence levels. So if you look at some of the words that have come out of the governor's mouth versus some of the stuff that we're seeing in the Financial Times, there doesn't seem to be any consistency in the message that's being given by the Bank of England. So I don't know what that can possibly do in terms of confidence for the UK gilt market. It can't be a good thing. And I think there's just a bit of confusion that needs to be cleared up in terms of what the actual future policy is going to look like before any sensible decision-making can be made. So yeah, I think a little bit of clarity is what we're calling for in this space right now.
In the short term, we're hearing all kinds of stories that financial institutions may have to sell down gilts and other assets to meet margin calls. But surely the fact that you have a distressed seller makes the opportunity for a medium to longer term investor far more interesting, given the fact that we've got the most exacerbated, the largest yields we've seen in decades on the aforementioned assets as well. Does this make, for our viewers who can look beyond the current wobbles, does it make an interesting opportunity?
I think in certain spaces, yes. I think for people who have the ability, the deep pockets to avoid debt markets, this is probably quite an exciting time. Obviously, the proportion of investors that might constitute is up for question. So yeah, I think there are certain populations that might benefit from fire sales, but it all depends on availability of cash, I think.
James, how do we perceive the impact on monetary policy here in the UK? Because there are some fears that QT is not going to really pick up in any large way while the BOE is having to intervene in this emergency measure. Also, you'd have to ask about the impact on interest rates, even though the Bank of England wants to step back, so continue tightening interest rates. If you can't step back, then what does that mean for rates?
Yeah, I think fundamentally they have to pursue one policy. They have to be coordinated in their policy recommendations. And so if they're sending out mixed signals, there's multiple competing forces in terms of where that interest rate might settle. If the interest rate doesn't settle at a sufficiently high rate, we're in serious trouble. And we've seen that from the IMF World Economic Outlook that came out yesterday. The overwhelming recommendation is that central banks get on top of interest rates, like with short-term, like front-loaded, aggressive hikes. And if we don't see that, I think we're in significant trouble. So I think you're right. There is some concern there for me.
Hi, I'm Joanna Bersecci, and thank you for watching. You can check out more of our videos by clicking on the boxes on the screen. And don't forget to subscribe to our channel for more from CNBC International. Thank you for watching.